Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Equities are sort of a little bit of a holding pattern at the moment. US earnings were okay-ish. They're a little bit disappointing in certain areas. Other companies sort of came in slightly better than anticipated. So, sort of net, it was sort of pretty much as expected. But remember, a lot of the guidance have been marked down over the last sort of 3 to 6 months. Really, it wasn't too much of a surprise when you saw some of these companies beating their guidance going forward. Interesting as well, obviously, with the US presidential primaries now coming to sort of a bit of a head. The Republican nomination is now secured and sorted. Donald Trump is the only one standing. It's quite interesting, really. When he first announced his candidacy, people just thought, he'd be one of the sort of first or second to sort of fall out. But he just sort of gained momentum through the campaign. And it's going to be interesting now to see how the general election goes. It looks like Hillary Clinton will be the Democratic nomination. And it's going to be very interesting to see how that sort of pans out. And then obviously going forward, the impact on the US economy and obviously the markets. Interesting story obviously is oil. It's now sort of well above that sort of $40, heading to nearly $45 on WTI. And it's sort of quite interesting now as a sort of supply-demand imbalance. We're supposed to be sort of come back into equilibrium in sort of the third quarter of this year. Looks like that might come in a little bit sooner as oil prices are looking to rise. Indeed, in certain areas now, there's been calls that commodity sell-off has been overdone, and they're looking for quite a reasonable rally going forward. Mark Mobilis is probably one of the higher names, putting this forward. And it's interesting to note as well, if you just look at some of the miners and resources companies out in Australia, starting to creep back a little bit on the sort of equity share price as well, after a pretty savage sell-off over the last sort of 12 to 18 months. Obviously, the big news out of Australia was the cut from the RBA, taking interest rates, their sort of base rate down to 1.75. Historical lows, and it's just going to be interesting to see if that really does have much impact on the Aussie dollar. Certainly, at the moment, that's sort of trading, pretty well, and looking to push on. Here in New Zealand, we've got a Wellington Airport bond in the marketplace, 7 years, minimum interest rate is 4.25. If you're interested in that, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. For those of you who did subscribe to the Tegel IPO, it was a nice little profit coming through there on the opening day of trading. Traded up about 8 to 9%. Obviously, it did come in at the lower end of the price range on the IPO at $1.55. A reasonable sort of first couple of days performance out there from Tegel. Still looking for income options. There are plenty of options out there. Obviously with term deposit rates sort of falling pretty much all the time. There are some other alternatives out there, and if you're interested in discussing these alternatives, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.